Alright, so today we're going to be talking about Lucid Stock. Now, this company recently had its earnings and is down around 55% on the year. Now, Lucid is an EV car manufacturer and they're often compared to Tesla, but after these recent earnings and their earnings miss, all of those comparisons should be dismissed. And even though the company is down around 55% on the year, the market cap for it is still around $31 billion, even though it's showing little revenue and negative income. Now, I just want to take a look at their income statements. Now, we have to break it down by quarter since the company hasn't been around or public for a long time. Now you can see the last quarter of the company was their most profitable quarter, but it was only $97 million. Now you take a look at their operating income and it's over $500,000 that they're losing each quarter. So you can see that the company is never going to be profitable unless it lowers its cost of revenue. Now, this initial cost of revenue is just the manufacturing and production cost it takes to even get this $90 million. Now, I know the initial growth argument of the company is that, they're still in the growth phase of production. But remember, Tesla did this for a while and they were able to manufacture more cars at less of a cost. Now, Tesla IPO'd at around $1 billion and they made 1,000 cars their first year. And Lucid IPO'd at around $100 billion and they only made about 200 cars. So there's no excuse for Lucid to not meet the amount of production with the amount of funding that they have. Now, one thing to note is to watch the shares outstanding for the company. Now, normally a company continues to print shares when it believes it's overvalued or it needs to raise capital. And since you see that they're just burning money, they might just dilute the shareholder. Because if you look at the margins on the company, it's just burning money with a profit margin of negative 226%. Now, Lucid's probably going to blame supply chain issues for the lack of cars it's producing and the lack of profit it has. But the simple fact is the company's management is unable to allocate resources properly. Now, one thing that the company does have going for it is it's backed by the Saudi government. Now, Lucid plans on building 100,000 EVs for the Saudi government, and this is going to be the largest order yet. But take this with a grain of salt because currently they're still barely able to produce any cars. Now, a thing to note about this order is that the Saudi fund also owns a 61% stake in the company, so they're of course going to have priority on the orders. Now, even though the company's not profitable and it's barely made any cars, Lucid is currently valued the 17th most valuable car company in the world. So the fact that the company barely produces any cars and isn't profitable is just crazy. Now, for me, there's just too many red flags about the company for me to want to invest into it. But let me know your thoughts of Lucid down in the comments below. And if you enjoyed the video, like or subscribe for more content like this.